is this a billion-dollar company? And it's like, no, and that's okay. And not everything is or has to be a billion-dollar company. And that's amazing if that's what you want to work on and that's what motivates you, you know? But I was just like, let's just take it step by step and see how big it can get.
We have Founder Fundamentals today with Allison Medina. Allison is the founder of Tech Ladies and formerly was, I'm just looking at her background now and it's incredible. She was a rock star. She worked at Google. She was at the UN. Now she's founded Tech Ladies. She's bootstrapped her own business. So much exciting experience for her to share with us today, and also to just have a conversation on bootstrapping and building businesses. Allison, I want to give you the opportunity to introduce yourself as well, and then happy to start the conversation after that. But welcome, and thanks for joining us.
Hi, everybody. Thanks for having me. My name is Allison. I'm the founder of Tech Ladies. If you haven't heard of us, we're a community for women in tech, and I started it a few years ago. It's grown a lot. We now have 100,000 members. And we do, so Tech Ladies does like a couple of things. We have our community. We also have a job board, which is really active, that helps companies hire more women in tech. And then we have like a paid community called our founding membership community. We do weekly webinars and online events and learning. So we do all of that. We used to have in-person events, which we actually luckily had scaled back right before 2020. So we were in like the perfect position to just go with our virtual events. Some other background on me, I worked at Google, Foursquare in product marketing, a couple of different types of roles. But I think I always knew I wanted to start my own thing, and I didn't know what it would be. And I never set out to bootstrap. I'm a new angel investor, so I'm learning about investing now for the first time because Tech Ladies never took any venture capital. So I'm like really passionate about both, like talking about when, you know, your business is ready for that, how you can get started on building a company. I'm a solo founder, so I'm always happy to talk about that. And what else? Turning your side hustle into your full-time job, because Tech Ladies was my side hustle for actually like a year and a half, maybe almost 2 years before I went full-time on it. So hopefully these are all things that could be useful for you to chat about, and I'm happy to take any questions.
I'd love to just start with diving a little bit deeper into the context. Could you talk a little bit more about like building Tech Ladies? You mentioned that you guys haven't raised any venture. Like, what is the journey of kind of bootstrapping this company, and maybe also past experiences you had with bootstrapping? Like, what is, like, why is bootstrapping a term, and why should people sort of be aware that this is sort of one of the paths to build a business through? Because of course venture capital dominates the narrative, at least it tends to in tech.
Yeah, it definitely does dominate the narrative, and that can be really hard to like not get caught up in. But for me, so I started Tech Ladies as a community first. In fact, we were just meeting up at like in a New York City coffee shop, and I realized that a lot of the problems that I was having at work as a woman in tech were not just me. These problems were being experienced by a lot of women and underrepresented people in tech. So like not being paid fairly, not being respected, not being invited to the right meetings, not being promoted, and just feeling like stuck in a lot of this. And so it was two things. I realized that like not only were these coffee chats that I was organizing in person just really fun and also really validating, but I was doing two things. Like I was being validated about the things that were hard at work, and that, you know, tech still had a long way to come to make it a change and make things better. And then also simultaneously, just like this was building my network to meet with people, because people would bring their friends, and then it would be, oh, somebody works at this other amazing company. Now I'm meeting this amazing engineer, you know, like my network was really growing from that. And it allowed me to sort of jump around, go wherever I wanted, not have the typical like slog of a job hunt that you usually have when I was building my own career. So we basically tried to figure out like, well, if we can do that in a community, how does that become something that we can grow to be bigger so we can involve a lot more people in it? So that's sort of like where Tech Ladies came from. And to this day, I mean, that's still our mission, is like getting more women into tech, helping companies hire more women in tech, then also being there for the support when you're like, okay, once you're in that role, how are you actually being supportive, and you know, who can you go to ask these questions that are these sticky situations type things. And so that was sort of like the idea for all of that. How it became bootstrapped was, it was so funny because it didn't set out to actually build this as like a product or a service or anything, or even a paid community. It was just like something I was doing because I loved it. But slowly I started to realize, like, okay, we do also have a business here. So this was in like 2014, 2015. I started asking companies if they wanted to just post a job in our newsletter we were sending out. Started from a coffee meetup grew, launched a newsletter, you know, like all this really easy, like lightweight stuff to get it going. That I wasn't building anything from scratch. Launched a Squarespace page as our first website, like just super, you know, easy stuff to get it out there. But because it kept growing, it kind of taught me that there was something there and something to it. So it wasn't just me like, hey, I have this idea, I want to put it out into the world and test it, but like actively putting it out and seeing that it was helping people. And then very slowly adding like building blocks to it from there until we became like, now we're a company and we have people who work on it and we're 100,000 members and it's a really sustainable bootstrapped business. So.
Yeah. And could you talk a little bit more, sort of as you started to turn the corner and see that, okay, this thing that I'm working on, maybe there's a business here. I think that's a realization that a lot of people sort of working on these passion projects have, especially when they tend to turn into companies. Was there a point at which sort of you were faced with the decision, or you started to think, is this something that I should sort of, as people say, pour fuel on the fire and raise money to grow and scale? And then what was the calculus in that decision for you, or was that a decision point at all?
Yeah, I mean, when I was working at Google, I would come home and like, it was great because I could come home at a normal time, and I was home at, you know, like 6 o'clock, and I had already had dinner at Google, like an amazing, ridiculous, like launch pad to be able to do this. And then I would come home and just work on Tech Ladies. And I was working from like 6 to midnight every night. And then I would just want to work on it all weekend. You know, I'm not saying like, oh, we should talk about this like hustle culture and we should all be doing this and this is how everybody needs to start a company. Like, no, but it will fit into my life at the time. And I was able to do that. And I just used like every minute I could to build that. And that was like where I started to see, like, if I have this many hours where I'm putting in and I wasn't treading water, like I was actually, it was growing. And then we had more companies coming to us than we could even, like I could even manage just on my own. And I was like, I need to hire like an admin assistant. You know, you just started, there were signs that this was growing. And so it was like telling me that it was ready for it to be the next step. I was putting in the time. I was like, could see that I wouldn't get bored of this anytime soon. And so then the next step was like, yeah, how do we fund this thing? Like, how do I leave my job, which is a good job, to do this full time? And somebody gave me the advice to take like a week off from work and do it full time. And that was really great advice to see, like, okay, do I want to actually wake up every day and do this and work on my own? And so I did that for a week, and we just like grew so much that week and generated like interest, and like our members were coming in like really fast. And like, I was like, this, I have to do this.
Yeah. And so then what would you say when people sort of have maybe an idea and they're working on it and they're excited by it, at that point where somebody's deciding, is this something, like, when should the notion of, when should I be thinking about venture capital? Should I be thinking about sort of just buckling down and bootstrapping this to a certain point? Like, how does that decision, A, where should that decision come in? And then B, does it change over time, right? Because I've heard of stories of founders who bootstrap to a certain point and then they realize, okay, now I want to raise money for it. Or how do you think about that?
Well, I met with some VCs and in the very early days, and they were like, great, pitch me. Like, how is this the next LinkedIn for women? And I was like, no, like I couldn't like bring it up to the point that they wanted to hear that it would be the return that they would need, because the way VC works is that, you know, like they're spreading out their bets to try to find something that's going to be really big and give them huge outsized returns. And I felt like two things. Like one, we wanted to change the industry. So we needed to like feel like we were staying independent enough to be able to do that, to say like, no, if a company is treating workers really poorly, we do not want them on our job board. Just like putting that in our DNA from day one and then sticking with it has actually served us really well over the years, even though like it's, I guess you could say, kind of risky to do that. And so part of it was like not having any owners was really important for that side of the project, which is like, we do want to make a dent in this industry for diversity and inclusion and not just do the same thing over and over. And also, is this a $1 billion company? And it's like, no, and that's okay. And not everything is or has to be a $1 billion company. And that's amazing if that's what you want to work on and that's what motivates you, you know, but I was just like, let's just take it step by step and see how big it can get. And so, and where's our biggest, like our mix of impact versus like the amount of money we can make versus the dent we can make in this industry. Those are like the three things that we're always holding and always were. So venture capital just didn't really make sense for us then. That being said, I still never say like never, you know. I also, another thing that I did was that I think is useful for people to note as they're building companies or thinking about building companies is like, you can also, as you said, like bootstrap up until you hit a wall. If the wall is, there's one thing blocking us getting to the next stage and that thing is capital, then you should raise capital. Like, you know what I mean? We never hit that thing. We were like, all right, this is hard, but I think we can figure it out on a shoestring. And like, we always did. And so I'm still waiting for that wall that we're going to hit where it's like, okay, we simply cannot get to the next stage without capital. And if we get there, then we'll raise venture capital at that point, but it hasn't happened yet.
Yeah, I think the point that resonated with me there is like, often venture is seen as like a, not a means to an end, but rather the end itself in terms of like the perception around it. And at the end of the day, right, the question for founders, tell me if this is sort of in line with how you're thinking about it, but like, it's a tool that your business can utilize if, of course, if you have access and whatever, to get to achieve the mission of your company, right? And so for some companies, maybe it makes sense, maybe sometimes it doesn't, and like, maybe it even changes, right? Like you said, never say never over the lifetime of a company. So I think that distinction is important, right? Like just because you raise from some firm doesn't mean that you've won necessarily, unless your goal is to raise venture capital. And I don't know how useful the goal that is.
There's a lot of ego tied to it. So like, and there's so many businesses that could be huge multi-million-dollar businesses that don't need venture capital. And they actually shut down before they even got started or got to live that potential like life because they took venture capital and they had to do things too fast and they crashed and burned. So it can be a hindrance as much as it can be a help. You have to be really strategic about it. And it was hard for me in the early days. You know, I was coming from like a very comfy, cozy like job to just like working alone in my apartment all day and like not having any perks and like kind of missing an office. Now we've all gone, you know, almost a year without being in an office. But at the time that was like a little bit of a hard adjustment, or just like seeing people who did raise venture capital at that time, this is like 4 or 5 years ago, being able to like get an office and hire a bunch of people off the bat, and how like great that must have felt when we were just like kind of like working remotely, but and alone. But like, I don't regret it now. A lot of those startups are already done and packed up and moved on, and they're on to new projects, and we're still growing and like hitting our stride. So it really depends on what you want to build. Cause I'm never like anti venture capital. If you need to be like first to market, you need to beat certain people out. I mean, or you just need money for R&D. The thing you want to build simply cannot be bootstrapped. There are tons of times when venture capital is amazing.
Yeah, definitely. If everything goes right, what does a bootstrap business like Tech Ladies look like in 5 years, in 10 years, right? Because the outcome, right, when you take venture capital is almost imposed on you. You're going to create $1 billion business, you're going to do this, you're going to that. That's like the ideal outcome. Like, do you have a sense in terms of either movement towards your mission, in terms of making the industry, changing the industry for the better? Like, what does that look like? Maybe there's two cases, right? Maybe there's a case in which you at some point do raise venture and maybe one that you don't. But I would love to hear just sort of your take on what is the ideal outcome, given that it's not imposed on you by something like venture capital right now.
Yeah, I think the ideal outcome is to have like the ultimate optionality. Like you want options when you run a business or even in your own life, you know? Um, and the more you set your business up that you will have those options, the better. Like there's no reason you can't raise VC later. Like there's no reason you can't like start something over if it doesn't work, you know? But I think for us, to be this many years in and like know that when we need money for something, we can kind of just be like, okay, how can we make money? Okay, what does our community that loves us and trusts us really need? Maybe that's a new revenue stream. And then we figure out how to launch it, you know? And that's like an amazing option to have that so few businesses have. But it took years of like grinding and sacrifice. So that's where you do trade-offs, where you're like, you're doing everything yourself, you're working really hard, you're going without, you don't have any of the ego boost things that people around you have that make you feel like you've already made it, and you're doing things a lot slower. Like those are the trade-offs. But then maybe in just a couple of years, you've got like a multi-million-dollar business that you and maybe one other person own, and you can do anything you want with it. That's amazing. And those stories aren't told or celebrated that much, but it's like 100% within everybody on this call's reach to build a business like that. And nobody's going to stop you. That's the amazing thing, you know? So I feel like it's, if you can stay like not getting caught up in that, not getting caught up in all of the hype, and just build something really useful that people really love and build a lot of trust into it, then you have options at the end of it.
Yeah, definitely. And I see people's questions coming in. I want to make sure that we do get to those. We'll probably get to those in like 10-ish minutes, and we'll start the open Q&A. So please feel free to continue putting questions in, upvoting, and that whole shebang of things, so we can get the best questions out to Allison. What are just a few more that sort of I have prepared in the thread of conversation that we're having right now? What are some of the mistakes that you see founders make, especially at the earliest stages, when sort of building something, trying to validate it, in terms of how they think about managing growth, runway, finances, etc. And like maybe something that a more direct question is like, what are the symptoms that like a company that shouldn't or like might not need to take VC is taking it on, and that is then imposing or infringing on that founder's goals?
I think it's as simple as like, have you tried launching a product where you ask people to pay you money yet? Like that's number one. Some people build entire products before doing that. Like a lot of people build entire products before doing that. Like what's the simplest thing you could put out where the thing that you think your company will eventually build in the simplest version of it is you put it out and see if people are willing to give you money for it, and then figure the rest out later, right? If you're not making any money, you're not making any sales, okay, like now you can figure out where the breakdown is in between. But like, have you even asked for money yet? Like, have you even asked the people who love the thing you're doing to exchange money for it? Like, if it is valuable to them, they will do that. So that's like the first thing, is just like trying to, you know, charge for your product if you believe that it's valuable. And then if you can see, I think that like, I don't think everybody needs to think of it like this. It was helpful for us to think of that wall. Like, what is the wall where we cannot go any further? Or two things, is there a wall where you hit where you can't go any further without venture capital? And the venture capital would solve a bunch of problems for you and give you more time and get you to the next step. Or are you killing it so much on something and throwing some money on it would really truly be the thing to like triple, quadruple in a much shorter amount of time? If you can find that, then it makes sense to take money too. And then it's also, the question is just like, well, okay, like how fast should you grow? Everybody assumes that you should grow as fast as possible, and it's not true. Like it can end companies so much to grow too fast. So you also have to figure out like, well, what's a good growth rate for us? For us, we have a community. Like we can't really endlessly scale it. Like we really want to know people in our community, know what they want. We really want them to fit our definition of a tech lady. So for us, growing at like a more slow and controlled pace totally made sense for us. Depends what you're, you know, what you're selling. But I think that that's something to think about too, is like, how fast do you need to grow?
Yeah. Definitely. And I'm sure people are going to have more specific questions in terms of how is that measured and how you manage it, and we can get into all that. I want to switch gears a little bit for the last few questions before moving into sort of the fellow Q&A. Kind of more along the lines of the mission of Tech Ladies, more so than the operating principles or the fundraising. A lot of the founders in this room are currently working on stuff, and they're looking for teammates, they're looking for co-founders. What are some of the things that founders can do from the get-go to ensure and double down to make sure that their hiring and their culture, et cetera, is inclusive, and sort of to your point that it is enabling and maintaining space for Tech Ladies? Like, what does that look like at the earliest stages when it's just you or just you and a couple other folks? How can people look out for that?
Yeah, we work with a lot of really early stage companies on the Tech Ladies job board, and our team on that is like not a team of salespeople. It's like a amazing HR person and an amazing career coach, actually, who run the back end of the Tech Ladies job boards. So when people come to post, they're often like, hey, I just raised my first round. I'm a first time founder. I have no idea how to hire or build a team. And we'll help them a little bit on that too. Like, here's how to write an inclusive job description. But we tell everybody, like, it's good that you're coming to something like Tech Ladies now at the way beginning, because it is very hard to go back and undo. Like, if you hire your 3 white male friends who go to Stanford with you, like, you're already set the culture, and it's going to be very hard for a woman or person of color to come in and feel comfortable already, even on a small team, right? It's like, but that's definitely how these problems start. They start with like your first few hires. So I know it's so hard. There's so many things going on when you're first, and it's so tempting to hire your friends or people you know, or people who are in your own natural network. But we tell people to really like try from the first few hires to go out and like hire people with different types of backgrounds in every way, to start early. And that sets your culture, you know, it sets it from the first couple of hires. It's obviously a much bigger problem for, you know, Google, Amazon, gigantic companies to go and like try to put these diversity and inclusion efforts in place later. Because it's not just about like who you hire, but then how welcome do they feel when they get there? Like, where are their paths for advancement once they're in? So I'm sure we've all experienced like this to some degree. So yeah, if you're starting a company, the earlier the better to get started on like who's your co-founder going to be, who are you going to hire, or even like if you are taking money, like who are you taking money from? You know, like how can you make sure it's like everything you're doing is diverse across the board?
Yeah, definitely. And then the last question I have right now is, you're also an angel investor alongside building Tech Ladies full time as a bootstrap business. And it sounds like you're more mindful than most investors I've talked to around like understanding how and what taking on capital affects obviously both the financial side and dilution and all these things, but also like the actual mission and outcomes that are placed or implied to that founder who then takes on money. So how do you think about preserving optionality maybe, or what is your perspective in terms of how, when you invest in a business, like what are your expectations and what should founders expect when raising angel or pre-seed money, in terms of what they should look for in investors, and also your take there?
Yeah, I think for angel investors, you're just literally looking for people who can help you. And like the reason that I angel invest in the things that I want to do with it is basically because to me it's fun to see companies at the beginning again, because now I'm in it. Like, I'm many years in, and also like I'm not like a serial founder. Like, I want to run Tech Ladies for a very long time, and I want to grow it to multi-million-dollar business, and I would be really happy with that, plus tons and tons of impact in our industry. Like, those are the things that would make me happy, and I can be entertained, and like that could fill me up for many years to come. But I miss the early days of building a company. And so like, I think realizing that people become angel investors for all different reasons. And like, so if you're working with angels during your raise, like they're probably like that. Like, they want to help, they want to go on the ride with you, they think it's fun. And I've even learned a lot from like my companies that I've invested in. Like, my founders are like so willing to come to me and like ask for help for things. And it makes me realize that like I should have been more that way for both, like, even though we didn't take on investors, you know, like everybody in my network, like these folks are willing to like hit you up, and that is the best. Cause like that's why I'm doing it, you know? So like, don't be shy if you end up taking on angels by saying like, can you intro me? Can you do something for me? Like, it's almost like I work for them, you know? It's like the opposite of like the dynamic that you would think it would be. And for me, that's interesting. I'm learning more for my own business to watch other businesses in different spaces execute on things. And it's also just really fun. So I think like, even if you have tons of, like, if you end up raising a round and big VCs are like, can fulfill your round, like, I think it's also smart. A lot of people are doing this now where they set aside like a percentage to take on some angels just because they know they'll be like valuable to them in other ways other than just money.
Yeah, that's such a good point. And yeah, I think just it's so fun to see, at least with companies that I've worked with as well on deck, not as an investor, but seeing the folks involved in those companies, angels through VCs, just get excited about sort of like the earliest stages of a business. So I'm excited. There's a whole host of questions that are piling up and upvotes piling in. So if you, for fellows, make sure that you hop into the Slack channel. I just posted the link again in the Zoom chat. Upvote the ones that you want to see answered, and let's dive in. There's a bunch of questions that have a good amount of votes, so I want to make sure we get to them so that Allison can answer all of your questions. Camila, you had a question around profitability. Would you want to hop up and ask it? Is Camila still here?
Hi, yes, I am. Hi, Allison. My question is, in the beginning, did you have a timeline for profitability, and what did that look like?
Yeah, we were just profitable from day one because our expenses were like zero. So I know it's not like a great answer if you have a more complicated type of thing that you're launching where you're like, we have to go to R&D for 12 months until we have our thing, you know, but we just launched like day one selling jobs and we were making money. So we were technically profitable. So then the question is more like, okay, then how do we know when we could hire someone? How do we know when we could hire a few people? Like, how do you know when to grow? And so we just like watched it really carefully. Like, if anything, I think I was too careful, which is also a big problem. Like, probably one of my biggest regrets, if I could go back a couple of years, is be like, okay, apparently this is a thing women do very often as well, which is like, we're too realistic about the companies we're building. And it's good to be a little unrealistic. It's good to be a little risky. For us, it worked out because like, I was like, okay, we're stable, we're growing. Like our first year we grew a lot because we launched everything. And then our second year, we just kind of like had the same year as the year before because like we were just running it. And we were like iterating, doing all these little things, but they weren't the things that would really move us forward. So I think figuring that out, it just takes some time, but I think like that's one really easy way to be profitable is keep your expenses down. And it does keep you going, you know, because you don't feel like, oh my God, I'm in the hole. What am I going to do? How am I going to crawl out of this? You know? So figuring out what that number is for you, if it's not profitability on day one, because you've got a super simple, easy business that you're running from home with no overhead. But try to make it as much as like, are there ways you can make it more like that? You know, like I said, we didn't have an office. We still don't have an office. Like, do you need an office? Like, do you need, like, it's like being super scrappy helps get to profitability faster. And I think it's worth, as much as I'm saying, don't be as scrappy as I was, like there's something valuable, I think, about keeping some kind of balance between those two, because it'll keep you going longer. Because if you feel underwater, you're going to quit. And that's what happens to so many founders is they're like, oh my God, I'm underwater. Like, I can't get out of this. Let me just fold my company. And if your goal is to like never fold your company, like keep it going. Like if you really are married to it in that way, you'll have a better outcome, I think.
Yeah, such a good question. Ellie, did you want to talk about sort of the halo effect and maybe how a bootstrap business can achieve that?
Hey, Alison, thanks so much for doing this for us. I have a question just about kind of, obviously you were building a community, so you had a bunch of these people, you know, kind of there already, but in terms of the kind of halo effect that sometimes VCs can provide for hiring, for, you know, just getting things off the ground, creating that momentum, how do you think about that in the context of your journey, and how would you advise us to approach that if we were bootstrapping?
Yeah, I think it's just like building a good network of people around you. So for us, that has always been, yes, the tech ladies community themselves. Like, and as that got bigger, we had more like people we could hit up for anything we needed, which was great. But also just your own network, like just being really committed to like keep meeting people, keep helping other people out, don't ask anything of them, and just being like a good friend and good kind of like supporter of what people are building, and going like long on all of your relationships can really help, whether you have VCs that are like helping you with that in a more formal way or not. There's also just like a bunch of people that if they like what you're doing will want to help you. So I think it's just really being out there. And something I tell people all the time is like, you know, it's a lot of work, but like keep up your presence somewhere, whether it's Twitter or wherever else that like it's working for you to meet people in your industry that can help you. Like keep it up, because it's a great way to stay in touch in between being able to do like how many coffee meetings can you possibly have to build up your network, right? But keeping like those folks around you and doing things for them. And that way you'll have a bunch of people to support you when you have a launch or something like that.
Great, thank you.
It's an interesting question. If I can follow up quickly, like one of the things that I see at least a lot of venture-backed companies do, or a way that VC can help companies, is it helps with distribution, right? If you're chasing a market, if you need to grow like extremely quickly, acquire a lot of customers, etc. How do you think about like distribution channels and how they differ for something like a bootstrap business versus something that's venture-backed and then is able to go spend on paid marketing and do these huge like CAC LTV experiments, et cetera, and just try to hyper optimize? Like, what is the parallel of that, or how might a bootstrap founder think about distribution? Like, is it all dependent on word of mouth, personal network? Like, is that something worth investing in more if you're thinking about bootstrapping? We'd love to hear your take there.
Yeah, I think as far as like getting the word out about anything you're building, and to find your customers and everything, like I think paid advertising is very dicey, because, you know, I worked at a startup that had raised $14 million and we blew money like on paid ads. And it's really easy to blow through millions of dollars on paid advertising and not get your company to the growth that it needs in the time that it needs. So it kind of seems tempting when you're like, ooh, this is working when we spend $600 on this ad. What would it be like if we spent $50,000 on this ad? We would be X amount bigger. And it's not true, like about paid marketing specifically. Like you have no idea what's going to work or where like it's going to start to take a nosedive. Also, if what you have in general like isn't working yet anyway, then it's not going to work at scale. So like it has to work on a smaller scale first. So like figuring out, like sometimes it's just as easy as like asking yourself clarifying questions, like who is our customer? Like who is the person that's going to pay for this? And like, how can we find them? And that's it, you know? And so it's like, yeah, will VCs magically unlock that for you? Like maybe, but will tons of money unlock that for you? Maybe. Like, I'm not saying these things like aren't like awesome to have, but they're not also necessary if you can figure out where your people are. And also if you're providing something valuable too, like people will figure it out and tell people.
Yeah, for sure. Aviola, you had a question around kind of double clicking and digging into sort of that inflection point where the company started to grow. Would you want to hop up and ask?
Hey there. Yes, I had a question. I wanted to know if there was a particular point or action that you took when you started to notice just serious traction and growth, and what was the action that prompted that, if you can remember? Or was there a specific action that you took? kind of?
Yeah, I think like for us, our growth was, well, first, like I said, that what was sort of tricky was like the first year after we launched and I went full time on it, and we like launched our paid community. We launched our job board for real. It wasn't just a newsletter anymore. Like it grew a lot after that. And then I just kind of thought like, cool, we're just going to keep growing like that. But so for us, it was just like, it was actually like a lot of little things. It was figuring out like, okay, well, now that we have these, like, these are our two main revenue streams, like, how can we grow them and not be distracted by one or the other? Like, because we built our business that we had basically two revenue streams, which at times is even hard. When it was just me, I was switching back between them. I'd have like a week working on the job board, a week working on our founding membership, and then kept bouncing back and forth between them. But something that was helpful for me was I met with a friend who was launching an agency, and she was just like, I was feeling stuck at that point. I was like, okay, we're kind of just at this stage now. How do we get to the next stage? And she was like, if you had to make $30,000 this month, like an extra 30, if your business had to make $30,000 for whatever reason, like say you owed a debt and you had to pay it off or something, like what would you do? Like, and it was so clarifying because it was like, we had all these like wish list items and things we were getting distracted by and things we wanted to do or things that would be cool to launch someday. And then I was just doing that plus the day-to-day of everything and getting totally distracted. Right. And that kind of brought us to, okay, well, we've proven what we can do. What we do is really valuable. Why don't we charge higher fees to companies when they hire engineers off of our site? So we're not just a job board anymore, but now we're like this really bespoke place where you can actually make hires. And you would pay a recruiter up to $30,000 for that, right? So like, what can we charge for that? And so then we raised our prices. And so things like that, like looking at what you already have and being like, okay, wait, if we've proven this out, like, and if we had to just generate more money today, like what would that one thing be is a good question, because it makes you sort of like, just like drop all the things that are distracting you and focus on, okay, this is the thing that we're gonna go all in on, even though it's kind of hard. You know, or even though we're gonna have to tell people and they're gonna be confused because they wrote to us before and we were so much cheaper and now our prices are raised, you know, and like you're gonna have a little uncomfortable period making that transition, but it's so worth it in the long run because you're building a sustainable business.
As a follow-up to that, I wanted to ask, I can tell you guys are really, really community driven. What were some of the ways that you were able to build trust amongst your community? Was that specifically through the content? How are you able to build trust through the content itself? So I know you guys started with emails. What were some of the other, ways that you focused on building that trust with your community?
So we have like really active online community. We have two. One that's still on Facebook that's like gigantic, and it's our free community, and it's still really amazing. And there's tons of like great ways that people connect on there. But one thing that we did, and then we have our paid community, which is like our private community, where we do a lot of the same things, except we have our own community managers running it, a little bit more actively creating content and planning events for those members. But something we did really early on was create like a really strict code of conduct, and like all of these things that sort of feel like they would block people out. Like, oh wait, you're making it hard for people, actually work really well for a community, because people need boundaries and they need to be taught how to act in the space. And so we just had like tons of rules. We remove people if they're not being helpful, not being supportive, and that taught people to trust us, that they could come to us for this. And then also like even things as simple as like we still haven't cracked how to figure out, which companies are great for women and people of color and which ones aren't. That's a very hard problem. But when someone emails us and tells us privately, like, I had something racist happen to me at this company, something sexist happened to me at this company, like just pull them from the job board. We just trust our folks, like, and people see that. So it's kind of just like walking the walk on what you say you're gonna do and be, like really being that and repeatedly doing that over and over, I think is what helped builds trust.
Right, prioritizing value, it sounds like.
Yeah.
Sorry, what'd you say?
Oh, I said prioritizing. It sounds like you really prioritized value.
Yeah.
For sure. Matt, you had a question on sort of evaluating risk and how capital plays into that. Did you want to pop up and ask?
Yeah, hey, sure. Thanks, Rishi. And Allison, thanks for taking the time. Yeah, so the question was, how did you evaluate that you would bootstrap a business, test the market, only to find out that the market was there and somebody who had more capital could look at your model and then just capture more of the market or move faster because they had more resources now that you've tested it for them?
Yeah, I love this question. It's so interesting. You know, like there were and still are like other people doing similar things that had raised millions of dollars, and we were like existing alongside of them. And like I still think like in some ways we've grown to be bigger and more impactful than them without any of that capital. Because I think if you find the way that you're going to do something and do it in a way that's really different and super valuable, you don't need to necessarily worry too much about like how much your capital your competitors have. I think there are businesses though, that being said, I think that works for us because I don't think that we're the type of business that like we're a community, we have a mission, or like we want to have revenue and build it to a big company, but not at the expense of other things, right? And so like if that's not your company though, like that's totally fine too. And then you might need to be first to market with the most money from venture capital to do the thing in your space that you need to do. But in general, I do think like almost no matter what you're building, almost everybody can kind of like take a step back of worrying too much who's going to raise more money in your space and like outperform you or eat up too much of the market. The other thing is I just do believe that like there's a lot of space. Like for us in this, we were like, okay, there's 1 million women and non-binary people in the United States, even just the United States, that could be deemed a tech lady based on how we define a tech lady, which is like you work in tech or startups, or you do something techy at a regular company. You work in engineering, product design, like it's very open. And so, you know, after years, we have 100,000. It's like, there's still so much, you know? So I think figuring out like your actual market and what you need to do to be impactful in that, and then realizing that there's space there is something that's made us like not as stressed about people raising a ton of money, taking our formula and doing it. And the other thing is that nobody can really take your formula.
Yeah, it's so interesting, the point about like the type of business is so dependent on like what kind of, like it makes sense intuitively looking back on it, but I think a lot of people are, or at least the narrative broadly is like, oh, like you need to make like raise money to go do this, but like maybe Uber needed to raise money to become what Uber has become, but like tech ladies doesn't necessarily need to, just because the way that those businesses are constructed and the incentive structures there are completely different. Arjun had a really good question around incentivizing co-founders to come join and sort of making sure that expectations are aligned within that partnership with Bootstrap businesses. Arjun, do you want to hop up and ask?
Yeah, so Allison, thanks for doing this. Super helpful. So yeah, my question was really around, you know, how you kind of think about incentivizing co-founders for a business that's bootstrapping. I think there's a lot of us at ODF that are sort of looking for co-founders, and you know, one of the things that you're usually incentivizing co-founders on is that their equity is going to be worth a lot of money in a short amount of time. That's obviously going to be slightly different in a bootstrap business. So I'm curious if you, or I know you're a solo founder, but if you or any of your investments, as they're thinking about bootstrapping, have they tried other ways? Like, do you ultimately end up having to share a greater portion of the pie so that the risk reward is worth it for them? Or do you think about different ways to monetize, you know, if they're owners, like, do you give them dividends? Just curious, are there like creative approaches to incentivize getting co-founders who otherwise would join, you know, venture scale companies because they're looking to make the money meaningful for them?
Yeah, I mean, I recently hired my right hand and we do a revenue share. It took me years to find this person. I don't want to scare anybody off. You're looking for your co-founders now. And she's not a co-founder, but she's become sort of like my right hand. It's just really hard to find somebody who's going to be like a fit for you. And we do a revenue share. So that's also always a possibility if you're bootstrapped and you're committed to being for a while, compared to the other thing is if you're bootstrapped and you're profitable, you can pay a good salary. You can pay a good salary, and you can also say like, hey, like whatever we do this year, you get X%. That's a really interesting way to scale out and to sort of compete against people getting equity. The other thing important to keep in mind is that depending on the person, like I worked at a ton of startups, and like I put my blood, sweat, and tears into them and like never got any equity. My equity was never worth anything. Or by the time I left, I didn't stay long enough because I was interested in the next thing. Or what? How many times have you actually like cashed out your equity? Like if you're trying to get somebody who has done it before and wants to do it again, and that's like, maybe that's not a fit. But yeah, it's like, how much do you want to work on this project? Is that exciting enough to you on a day-to-day basis? And also like realistic to think like if you can build a big company that makes money, a percentage of real money that you get every quarter is potentially more valuable than equity, which might never become anything. And so I think for anybody who's been through it before, that might actually be more interesting to them if you can find the right person that wants to like go on that ride with you and would rather just get money every quarter that's real money than just equity that may or may not ever become anything.
Yeah, makes sense. So I guess follow-up is really like, it's going to be a longer search, but you're probably going to have to be bootstrapped and have something to share with them in lieu of equity.
Yeah,
it's not
or
the classic co-founder at day one.
Yeah, I mean, the first thing is like, can you find somebody who's as excited about it as you are? And also,
Right.
you view raising money the same way, because you don't have to commit. It's not like you have to launch your business and say, we're bootstrapped and that's how we are forever. We're raising, I mean, you could raise your seed and then never need money again. Lots of successful companies have done that. They raise like 1 or 2 rounds and then they don't need it. They're just like, they're off after that, So it's not like, it's more like, are you aligned on how you think about getting from one stage to the next, and just like being really honest about what that looks like. And then if it's like, hey, if it's just that we stay bootstrapped and we make revenue and we split revenue in this way, and if not, this is how we'll structure it, if we have a cap table.
Super cool. Thank you.
Awesome. In terms of the actual the operational side of running a bootstrap business, I think Camila had another good question about managing expenses and tracking metrics, etc. Did you want to hop up? No?
Hello. Yes. So my question is, at least in the beginning and even today, so how do you manage your growth as a bootstrap business in terms of just tracking P&L, R&D, anything? Is it on a weekly, monthly, quarterly basis? How do you kind of keep yourself accountable and keep yourself organized in the back end?
Both of our teams have weekly goals, and we track them every week. Like, how are we doing towards these weekly goals? And then we have, we also have quarterly, which me and my like right hand are more like strategizing about that. And then our teams are looking at what we're doing every week. And it's not like this super pressure of, oh, we didn't reach it, therefore whatever, we're in trouble or something. It's just sort of like, let's make goals that feel a little bit hard to do and like a little bit out of reach. We actually don't want to be hitting them because we want to just always be like a little bit behind them to see where the line is, and then adjust as we go. So every couple of quarters we'll be like, wait, we can actually say we want to do this week. We want to have this many people active, or we want to have this many people commenting, or we want to have this, we want to make this much revenue. So we kind of look at it like that. Like, yes, we're tracking them every week, but we're also a little bit flexible, and they're deliberately like not meant to be hit, if that makes sense. And that has worked well for us.
Sorry, I think I was muted. Jennifer, you had a question about sort of balancing mission versus impact and how that plays into scale. Did you wanna ask?
Yeah. Hi, Allison. I am also very mission driven, and it sounds like that's what Tech Ladies is as well. So I was wondering kind of, how do you balance really driving this mission versus having to also be profitable and sustainable, and how to make your business a long-term business?
Yeah, I think people think it's harder than it is. And the way I think about it is like the mission is just kind of always going on in the background. If it's built into like what you've created, then it will kind of just always be there and be happening. But you have to guard it with like ethics and principles, which is the hard part. So that is when you have to say like no to business because it's an unethical company that you don't want to be aligned with. Or I think what a lot of like mission-based businesses have gotten into trouble when they like oversold what they can do and the promise that they can make. Like we're gonna solve sexism in the end. Like, no, we don't go out and claim like we're gonna do like gigantic things. We're just like gonna do as much as we can to try to make it better. But we don't overpromise it, and we like own mistakes when we make mistakes, and we just keep trying to move forward. And I think that there is like a world where you can do both. And so, yeah, it's not going to be perfect. That's probably the hardest part for me, is because like I want everything to be like perfect and done well and tidied up in a bow. And like if we can plan it and we can strategize it, and like if you want to have a mission behind your business, I think part of it is just accepting that like you're not always going to be right. You're always going to be learning. You just like do the best you can do right by people and your community, and people can see that, you know. Yeah, I don't know if that's helpful, but the mission stuff is kind of always just like in the background of what we do. And it's there for gut check too. Like, do we want to do this next thing? Does it fit in with our mission? And then the other big hard thing about it is that like someone asked me very early on, like, wait, you're doing this thing for women in tech, but like that's going to be solved like soon, right? Like we're just gonna, I'm sure in the next couple of years. This is like when we formed, when people were like just talking about the pipeline problem and how there weren't enough women in tech to recruit, which is an excuse we've heard for like not recruiting people of color and Black people at work too. And it's like still such a BS thing that hasn't barely inched forward in 5 years. So I think the other hard thing about mission-based businesses is like knowing that you're not going to solve it. You're just going to see like incremental gains, and that part can be hard.
Thank you.
And then last question, just because we're coming up on the hour. Sarah had a question about investor appetite for community-based businesses and sort of what's like how to think about communities and venture capital and all these different things. Sarah, did you want to hop up and ask? I'm butchering your question right now.
Hey guys, I'm actually in the middle of the street waiting for a bus, so I'll make it quick. Alison, thank you so much for your time. So I've kind of pivoted recently, noticing that I'm stuck in a chicken and egg problem, working on a consumer product in terms of like climate and sustainability. So I'm going to start with a community first approach, but I'm just wondering what the appetite is like for investors to invest in companies that are going community first, and what's the best way in like proving value to them pre-product, quite a long way pre-product.
Yeah, I think it's so interesting because when we got started, we were just kind of doing this because this is what we wanted, like naturally to connect people, and this was the easiest way to do it, was to build a community around it. Not even like thinking or realizing that it would become this really powerful thing where we can say like, okay, now we have these folks who know us, and what else can we build that would be, you know, like something that could turn into a business. Like that wasn't really even a framework even like 5 years ago, but it is now, and investors are definitely taking notice, which is very interesting and very cool. And so, yeah, I think that there's, it's sort of like one of the like hot things this year to talk about community, like funding community businesses. And it'll be interesting to see how this plays out, because I know like the goal for VC is also for this to become gigantic, and it is hard to keep your community like real and grow very, very quickly. But depending on what you're building, like I think it can be done. And I think that there's definitely a place for VCs to help fuel that growth. And I think they're also understanding that it's not as much about platforms anymore, and it will become less about platforms in the next probably like 5 or 10 years. It's more like, well, where's your audience? And do they really care about you? And that's community. So I think that investors are like starting to get excited about that. I think it's, if you're thinking of building a community first type business, it's actually like a really good time to be doing that.
Thank you so much.
Yeah, the internet has just opened up. You can basically find any niche group of people across any part of the world. I think that's really, really powerful. I wanted to give a big shout out for Allison for coming out today and for sharing all of her wisdom and answering our questions. Allison, any sort of closing thoughts for the group in terms of how they should be thinking about, like, it's very much seems like a mix of an art and a science in terms of figuring out how to fund and grow your company, but any overarching advice? A lot of these folks are still in the early phases of exploring different problem spaces and trying out new solutions. But yeah, would love to hear if you party
yeah. Overarching thing is that I found that has been so like interesting over the past couple of years since starting my company has just been that like there are fewer rules than you think there are, you know? And so whatever those assumptions are, like, oh, I have to do it this way, I have to build it this way because that's the way that people expect it, or that's the way that people want to see it. You don't have to do it that way. And like that, so then what way do you do it? Well, like, what way do you want to see it done? Like, it coming from you can be really powerful. And like, I know that sounds a little like cheesy and floaty or whatever, but it's really true that like whatever you're passionate about, the reason you are the person building the company that you're building is really intrinsically valuable. And that's the part that nobody else can copy. So figuring out like what you particularly can bring, why you to build this company, and like meditating a little bit on that is really, really helpful, because that's what's going to help you find your differentiator, realize what rules you do have to listen to and which ones you can break. And then figuring out like how you can bring who you are as a person, like put your mark on your company. There are like really, really great companies that have done, if you go back and study really great companies that have grown, they usually like have a founder like that who really put their mark on it. So thinking about how to do it in a non-generic way is really important.
Sorry, this mute thing is killing me today. Allison, what's the best way for folks to get a hold of you? And yeah, if you're open to it, I'm also happy to add you to the Slack channel that we have as a guest for today's event, so people can follow up or continue to ask questions. Is that something you'd be open to? Sure. You can add me. You can also tweet at me. I'm pretty active on Twitter. I'm at Tech Lady Allison on there, and we are at Join Tech Ladies on Twitter, and our website is hiretechladies.com. If anybody wants to see it or join. Amazing. Yeah, I'll share those links in the channel and make sure that you get an invite. But thanks so much again for sharing an hour with us. Thanks, it was so fun. But yeah, appreciate your time and appreciate all the fellows who came out today.